The promise of rapid wealth generation often overshadows the risks involved, leading to a surge of eager new investors diving headfirst into the digital currency market. Among the key drivers of this craze are influencers, those with remarkable online presence who wield considerable power in shaping public opinion. Their endorsements can create a tidal wave of interest around specific cryptocurrencies, making them appear like golden opportunities. However, it's vital to remember that following their lead without discerning judgment can be dangerous. The influencer landscape is riddled with potential conflicts of interest. Many influencers are compensated for promoting particular cryptocurrencies, raising questions about their motivations. They might not disclose their financial ties, leading their followers to trust their recommendations blindly. The lack of transparency can veer investors off course, jeopardizing their financial health. Furthermore, the Indian cryptocurrency market is an evolving space, fraught with uncertainties due to minimal regulatory oversight. Such an environment creates ripe conditions for scams and speculative bubbles that can lead to rapid and unpredictable price shifts. Prospective investors must tread cautiously in this minefield. In addition to the regulatory challenges, the intrinsic volatility of cryptocurrencies is another hurdle. Prices can skyrocket one moment and plummet the next, creating roller coaster rides for investors unacquainted with the market dynamics. Investing without conducting proper research is akin to gambling, with the potential for devastating financial losses. To safeguard their investments, individuals must take a proactive approach to research. Relying solely on influencers is a risky strategy. Diligent market study and analysis of cryptocurrencies are essential. Understanding a cryptocurrency's fundamentals, market trends, and the technology behind it can arm investors with the knowledge needed to make informed choices. The mantra of prudent investing remains: do not follow the crowd. Instead, establish a personal investment strategy based on thorough evaluation and risk assessment. Engaging with communities, reading white papers, and consulting credible sources can provide clarity. Ultimately, a cautious and informed approach is vital for navigating the choppy waters of cryptocurrency investment. As you embark on this financial journey, remember that your investment decisions should be guided by critical thinking and personal research, because in the end, it is your money at stake. In the rapidly evolving landscape of cryptocurrencies, Indian investors face a multitude of challenges that necessitate rigorous research and diligent fact-checking. The proliferation of scams and fraudulent schemes has left many investor wallets empty and spirits dampened. A notable example is the infamous BitConnect scam, which ensnared numerous Indian individuals. To arm themselves against such risks, investors must delve into project teams, scrutinize white papers, and dissect the underlying technology. This approach aids in differentiating legitimate projects from deceptive Ponzi schemes. Market volatility adds another layer of complexity to the cryptocurrency realm. With prices capable of soaring and plummeting within hours, the risk of emotional trading escalates dramatically. By researching market trends, examining historical data, and applying technical analysis, investors can refine their strategies to avoid perilous instances of buying high and selling low. An informed perspective will empower them to navigate the tumultuous seas of cryptocurrency without losing their financial compass. Regulatory uncertainty further complicates the investment landscape. With evolving crypto policies in India, including potential bans and taxation complications, staying informed through credible sources is paramount. Investors must anticipate legal shifts to remain compliant and avoid unforeseen repercussions. Misinformation and rampant social media hype exacerbate these issues, as influencers often promote coins without accountability. To thwart falling prey to pump and dump schemes, a thorough verification of claims across multiple sources is essential. In addition, the dire need for technical and financial literacy cannot be overstated. Understanding the basics of blockchain technology, along with evaluating a project's viability, is crucial for informed decision-making. Security risks also loom large, as recent hacks on Indian exchanges demonstrate. Awareness of secure storage options, such as cold wallets and two-factor authentication, can protect assets from malicious actors. Tax compliance is another critical consideration that investors must embrace, with India's stringent 30% crypto tax and TDS requirements demanding precise transaction tracking and reporting. Moreover, assessing risk becomes a necessary exercise, particularly when juxtaposing cryptocurrencies with traditional assets. Research helps fortify investments, aligning them with individual risk tolerance and financial goals. Lastly, being cognizant of the lack of investor protection in this space underscores the necessity for thorough due diligence. Such vigilance stands as the primary defense against project failures, fraud, and financial loss. Ultimately, equipping themselves with knowledge will empower Indian investors to make informed decisions, safeguard their assets, and thrive in an unregulated, high-risk crypto market.